Good morning, everyone. This is part two of our nonprofits. We are here. I am your presenter. I'm not the presenter today. I'm the host, Chris Jackson. We have to update the slides. And Josh is here with me. And then presenting today, we have JT. JT is going to talk to us more about nonprofits and taxes and what to look out for. So welcome, JT. Thanks for coming and visiting with us again today.
No, I'm happy to be back. It was a blast last time, so happy to do it again.
Fantastic. And of course, with us, we have Josh. Josh, you want to take away and remind everyone about what you do?
Yeah, definitely. Appreciate it, Chris. So Joshua Thompson with Thompson Tax Group, we focus mainly on tax planning at the end of the day, kind of being proactive to your tax situation instead of reactive. We work with you throughout the entire year to see what we are doing, what we're not doing, and how we can incorporate some tax advantage ways or code advantages, income shifting, expense shifting, all those fancy words that tax planners use. So if you need any help in that aspect of it, go ahead and reach out to us.
Fantastic. And I myself, Chris Jackson, Cambridge Financial Group, we specialize in protection-based planning for businesses and individuals. And I love collaborating with CPAs and tax professionals like yourself, helping businesses and individuals, pay as little to Uncle Sam as possible. We all got to pay it, but we don't want to pay more than we need to. And so we got to use wise tax planning strategies to do that, especially if you're giving back like a nonprofit does, right? So we want to help those nonprofits that are just trying to do some good. We don't want them to not have the ability to give as much back to those that they're helping. So today we're going to talk about some of the things to look out for and how the nonprofits can avoid some unnecessary heartache. Let's just put it that way.
That's the key word right there.
Heartache. Yeah, we don't need those Tums.
Yeah. And this time we do have a slide here for JT. So JT, CPA. You want to share just a little bit more about yourself real quick, JT?
Yeah, absolutely. I'm a CPA, specialize in nonprofits. I got my CPA license about 4 or 5 years ago now. And we help everything from setting up helping corporations apply to become nonprofits. We help do their taxes, provide CFO services, accounting, audit services, the whole shebang. So if you're a nonprofit out there, kind of like Josh, we work with you guys year round, make sure you're making the best business decisions possible. And we set you up for success going forward.
Fantastic. Looking forward to learning some more information. Okay, we're going to just jump right into it now. Let's just ask the first question. So let's go from a perspective of someone who's starting a nonprofit. Let's say they applied for a 501c3, but haven't heard back from the IRS. But they have donors that want to contribute now. What are their options for doing so?
Yeah, absolutely. As we've all been aware, the last 18 or almost 2 years, 18 months, 2 years, the IRS is severely backed up. So they haven't lost your application. It's just before it used to take maybe a month or two. And now it's like, people are waiting 6 months, 8 months, no rhyme or reason. So the biggest thing is just be patient. I know it's hard. But the second thing is though, what happens is a lot of people have donors that are willing to contribute or ready to go, but I'm not C3 designated yet. What do I do? So their contributions are 100% deductible. Even if so let's use this year as an example. Let's say you applied in June of 2021. You have somebody in December 2021 that wants to donate money to you. You don't have your C3 status and you want to know, can they deduct it? Yes. As long as you've started the process, which you obviously have, they are retroactive. So if they donate to you today, the IRS deems them a nonprofit in February 2022, that person can donate to you and they will get the tax deduction. So it reverts back to the day you started your process, not when they wrote the check, or not when you became C3 certified, got your C3 status. Sorry, a little tongue tied. So yeah, long and short of it is they can donate to you and it is deductible.
Okay. Well, JT, like playing devil's advocate, what happens worst case scenario where if you find out that the IRS may deny it, what happens in that case?
Yeah, so if they do deny it, which is rare, but it can happen. If they do deny it, you would be considered a corporation at that point. You would have to pay income taxes at the corporate rate, which would be 21%, and then whatever your state's income level. So essentially you as the business, because you are a corporation, you would have to pay income taxes going backwards, less all your expenses. And then the person that donates to you, I would assume they would just pick it up as income the next year, or you'd almost have to amend it, I guess. So,
Yeah.
but it'd be such a small amount I would defer to Josh on that one, but I would assume you'd almost have to pick it up as miscellaneous income or amend it. Although for a small donation, you probably wouldn't be worth it.
Yeah, exactly. A small donation probably won't change too much, really. We're talking, pennies on the dollar that it's going to adjust your tax return at the end of the year. Definitely sit down with your tax professional, have that conversation. But really, it probably won't make that big of a difference. If you're giving millions and millions of dollars, definitely want to make sure they have that 501c3 first before you do that, just in case. But really, it should make too big of a difference.
No, exactly. So, I mean, in all my years of doing this, I haven't seen too many people get denied. They'll get bounced back essentially, and you have to just correct what you did wrong, but the IRS will never just flat out say, no, sorry, like you're out of time. So it very rarely happens. Normally you just have to correct it, but so.
That's interesting. That's good to know. Good information that I think a lot of people don't think about until they're in the process, right?
No, exactly. Yeah,
most people have an idea and they just want to go with it, and then they're like, oh, all these things I have to get done, and the IRS is a huge gatekeeper that we all have to go through, and it's like a metropolitan city that needs a 12 to 15 lane freeway, and they still got like a 4-lane freeway on it. It's like everyone's there, it's a bottleneck, rush hour is 8 hours a day, it seems like, so it's tough. So awesome. Well, let's go on to the next question. So am I required to give each donor an invoice proof of their donation? I'll go into that a little detail.
Yeah, absolutely. So what that really means, what they're asking for, that's more of like kind of like a QuickBooks question, but I would say rule of thumb is you want to have copies of as many receipts and invoices as possible. Obviously, that's 100% of the goal to get all that. But when a donor wants an invoice, what they're generally meaning is that a company's given a corporate match or donation of some point, and they need some type of backup. So what you can do is you would create an invoice or a sales receipt in your software for a donation of X amount. Doesn't have to be anything super formal. Or what you can do is you just create a sample thank you letter saying, thank you to John Smith for your contribution of $25. That's generally what people are asking. If you are starting to become a little bit larger as a corporate or as an organization, you'll want to get what's called a CRM system. Basically, it's like a database management software. Every type of company has them, whether they're for-profit, nonprofit. And what that does, it allows you to track all your receipts, and it will actually send out thank you letters automatically as long as that person has an email. So if you have monthly donors, you basically just have to write the letter one time. You put in their email address one time, and every time they donate, it just automatically sends out a thank you letter. So that's generally what they mean by that question.
Okay, awesome. Any follow-up questions, Josh?
Yeah, actually, JT. So I guess as the nonprofit, does that mean every time you get a donor, you should gather their personal information? And if so, what kind of personal information would be best to get from them?
Yes, you should always be doing it, because as any marketer will tell you, you want to get them in your funnel. So by the information you want, generally, you don't really need phone numbers anymore, just because people aren't really getting phone calls, but you will get their phone number for text messages, especially most of the CRMs that my clients use, Neon, Keela, Little Green Light, Salesforce is massive, but you have a client that uses that. So you get their information, phone number, email, and then it keeps you abreast, keeps you in contact with them. So you're always sending out, this is what our organization's doing, this is how many people we've helped, so on and so forth. So you'd want to get that email address and that phone number. Email list is still a very effective way of fundraising and marketing. So I would say that you always want to be getting those from all your donors, unless they're like a Facebook fundraiser, that's really hard to get. But for the most part, you should be getting their information, email, phone number.
Okay, got it.
Okay. Let's go to the next question. Why does my nonprofit need a budget, and how do grants affect our budget? So kind of elaborate on that, I guess. What should they be looking for with regards to those things?
Yeah. So budgeting is like any other business. And that's what I tell, especially a lot of my newer clients when they're just starting. You want to treat this as a business. It's not, I know it says nonprofit, but we still have to keep the lights on, still have to have more than what we spend. So we want to have that. So budgets are like anything in business. You want to be able to budget out, okay, these are my fixed costs. I have to pay for, if you have a building, you have to pay the rent, utilities, you have to pay some sort of internet expense. Maybe you have a database software expense, you have employees. So we want to know each month or each year how much we're paying out, or at least roughly, so we know. And we know we want to bring in, we need to cover this much in fundraisers. In terms of grants, grants are very hit and miss, I would say, depending on the organization, but generally you've got, I mean, at least 50, if not 100 different organizations that are exactly like yours applying for a fixed amount of funding. So when you're putting in those grants, what I would say, you want to know historically what you've gotten. If you win about 50% of your grants and you apply for $100,000, I would cautiously budget that you're going to get 50,000 of that, just because you're only going to hit a half of it so far. In terms of overall budget, you can base it in terms of last year's results, but you want to look at, you can also look at similar sized organizations. So there's a website like GuideStar, which is free. You can look up organizations of your similar size and you can do a search. You can break it down to like region, total assets, revenue, things like that. And you can look and see like what their expenses are. And especially when you want to see like their salaries, like what they're paying their employees. So you can look and be like, okay, well, if I make $100,000, this one makes $100,000, this one does. You can kind of gauge and see where you're pacing. It's obviously not the best way, but that's a really good way to budget as well.
Okay. So it sounds like really to create a budget, you kind of recommend looking at other nonprofits doing something similar. Would you ever recommend hiring someone to do a budget for you? Or is it something usually when you're getting started, easy enough to do it yourself?
So I'm gonna both. If you kind of have that background and you are able to kind of look at things from a higher level view and know where your money's going, you can do it yourself. However, what I found, a lot of people that do get into the nonprofit space are not, and it's not a shot at them, it's not disparaging. They're definitely not the most budget conscious, or it scares them a lot. So they think, I don't know what I'm doing. This is numbers. This is not my thing. My skill set lies somewhere else. So in that case, I would have hire somebody that can help you do that. And you get it by, vetting them out, and then a good accountant, for lack of a better term, would ask you, okay, well, what did you spend last year? Do you have a separate bank account? Do you have this? How many employees? And they will kind of just help ask enough questions to get there. It's kind of like going to the doctor. They ask you enough questions, they get the information from you, and then they give you a diagnosis. Same thing with a good accountant. They'll ask you the right questions to get the answers that they need and go forward and make a recommendation. One thing that any good accountant can do is definitely help you budget.
Yeah, definitely agree with that.
Awesome. Well, the next question is, do I need an audit or review on my nonprofit?
The answer is it depends. I would generally say no. So there are certain states do require audits. I know New York has a threshold. I believe if it's over $500,000 in income in general, you need a review, you need a review. If it's over $1 million, you need an audit. What audits are, they provide the highest level of assurance. So basically, an independent accountant or auditor looks at your financials, they test some transactions, they basically look at your books, for lack of a better term, or for layman's terms, and they say these financial statements are reasonably accurate. And again, if you're in a state that requires you to have an audit, you obviously have to have one. But if you just want to have one, I would proceed with caution, because those are very expensive. They are easily over $10,000, if not more, depending on the size of your organization. And a lot of times I get people coming to me saying, hey, I want to apply for this grant for $10,000. And they say, I need an audit. Can you audit them? Or can you audit us? And I will say, no, because the amount of money that you're going to win is $10,000. It's going to cost you at least $10,000 just to get it. And that's if you get it. So you might be out $10,000 for nothing. So how we say, don't do it unless you need it. And the only reason you would really need it is if you're in a state that requires it, or somebody says, basically guarantees saying, we're going to give you this money contingent on an audit. Then at that point, they're paying for it. So those are the only two times I would really say to get it.
Okay, so it doesn't seem like an audit you need like annually or every 5 years or anything like that.
No, just only if you're in that state and you're bringing in, like, I know I have a client in Georgia, they make about 1.5 million in revenue or contribution income. And they get an audit every year, but that's every other year, because they have to. So that's one where you were, but unless a state regulatory agency is asking you to, or it's in your bylaws, I wouldn't do it.
Gotcha.
The way to avoid having the IRS wanting to do an audit is by having a good accountant, right? That makes sure that your books are done correctly and that there's no big red flags. Is that a fair assumption?
Yeah, in a way, yeah, and in a sense, yeah, that's a good way to do it. This one though is pertaining to an independent audit, so it's not with the IRS, but yeah, that could happen too. The IRS could audit you. It is completely random, and if that does happen, you want to have your ducks in a row, as long as you basically, obviously you want to have as many receipts as possible, but you want to, the term is form over substance. So you want basically to, like, if you have an accounting software, that's a good start. If you have a CPA that does your books, that's another good start. If you have most of your receipts, if you want to have these certain controls in place that, like, it looks professional. If you just have your own bank account and you're doing stuff on legal pads and maybe mixed in with some Excel, and I think this is right, then you're not going to pass your audit. Yeah. But as long as you have all the factors in place, you have good people around you, those are normally a breeze.
Yeah, if you want to make an IRS auditor extremely excited, do everything through Excel and keep no receipts. If that's you're gonna make them have the best day ever.
Yeah, which is what we don't want.
But. Yeah, you never want it.
Do IRS auditors get more money for that, or is it just it's government work?
No.
Right?
If government work, it's they just feel good when you get home.
They take joy in other people's suffering. Is that the idea, Josh?
That's the bonus.
Something like that, yeah. That's a word on the street.
Yeah, just the best practices, regardless of whether it's an individual audit or a government audit, just have your books in line, because you never know when you're going to need an audit. So that sounds like a good rule of thumb. Perfect. Anything else, Josh, you want to add?
Nope, I think we touched on all of it.
Okay. Next question is, how do I record non-cash donations, also known as in-kind donations?
Yeah, absolutely. So in-kind donations are based, as we said, non-cash donations. It would be like if somebody donates computers to you, or a lot of times if you're a nonprofit and you have to, like, transport kids around, somebody will donate a bus or van, something like that. So those are recorded at the what's called the fair market value at the time of donation. Obviously, that's a mouthful. To make it easy, if somebody were to donate 5 brand new MacBooks, what you would do is go to apple.com, look up the value of it, and you record it. So that's the best way you could do. If it was a car, you go to Kelley Blue Book. You don't have nothing crazy. Also, what other people do, what happens a lot, you can donate stocks. Those are super easy. So you could just say, if somebody donates to me today 10 shares of Apple, I would just go on Yahoo Finance and see what the stock was selling for at that date of donation. So, and another question I get in terms of this is donated services. So that's a little bit tricky. If you're just volunteering your time, that's generally not deductible. So there's different thresholds that the IRS has. First one is you have to create or enhance a non-financial asset. So when we're thinking of this one, you want to think of somebody like constructing a building for you, putting in a new server, things like that. Has to require a specialized skill that would be purchased if not donated. So for instance, the classic one is lawyers, accountants, doctors, fundraisers. So you can ask the people, and in order to record those, you can ask those people, like your lawyer, say, hey, what do you normally charge in an hour? If they say $500 an hour, which is super expensive, and they worked on your stuff for 2 hours, you would have $1,000 as contribution income. as I said before, generally people who volunteer for admin tasks don't get recorded. So if you have people, if you have like a 5K and you have people like handing out water, that would typically not get recorded. It's still very, very valuable. Still want to thank them and everything. But some grants will require that. Board member hours volunteered are generally not recorded unless they are that specialized skill, such as a lawyer, accountant, doctor, IT person, so on and so forth. And if you have a good accounting software, you can record these very easily because, like I said, you do have to assign a numeric value to them. So if you have a good accountant, good bookkeeper that you're working with, it should be very easy to record.
Okay. And then, JT, just to be clear, on the donor side of things, when they actually donate their service, can they write that off at the end of the day on their personal tax return?
In terms of, no, so generally not. So like if you're a lawyer, you can deduct you can deduct mileage that if you're a lawyer, if you drive like to the office and back, you could deduct that mileage. I think, what is it? I think it's 58 cents a mile, something like that. So you can do that if you use any supplies in there. So like if you're a contractor and like you donate the materials, you can donate that, but your time, no.
Yeah,
it's way too arbitrary.
Yeah, a lot of people, that's why I kind of asked, because it's one of those things, but a lot of people out there don't know, because I get probably asked every tax year, listen, I volunteered here and I gave X amount of time and they want to deduct it on their time, but it's just one of those things where the IRS is like, okay, how do you value your time and what you do in your services? So they decided to just completely take that out. You can't even deduct your time, but anything that goes into the work, whether it be, you bought spatulas to help out while you're volunteering, whether you drove, you went there, did, the things that you had to pay for to do that outside of your actual services and time, a lot of times can be deductible. It's still a conversation you want to have with your tax professional.
No, absolutely.
Fantastic. Okay, well, JT, that was all the questions we had for you. Do you have any final thoughts with regards to nonprofits? Any things they should know?
The biggest thing is just, and I'm coming from bias point of view, you definitely want to file your return. I get a lot of clients that say, I got my nonprofit status last year, didn't really do anything, and I didn't file a return. I would say, well, we want to file a return because even if you had zero income, didn't do anything, maybe even just only spent money, you still want to file a return. There's a few options. Most people just file what's called the postcard, because what people don't realize is that if you don't file a return for 3 years, you can automatically lose your status. And basically it means you get to reapply all over again, spend another $600, probably hire somebody to do it for you. And now you're out of pocket another, $2,000 to $4,000, depending on who's doing it for you. So that would be the first thing. Second thing is you want to treat it like a business. A lot of people think, oh, it's a nonprofit, I have to spend everything I get. That's not true. You need to have what are called reserves or net assets, because just like I said, for a rainy day, keep the lights on, you want to hire somebody, you want to expand. So you want to treat it like a business. And those are kind of pretty much the only thoughts I had. If you guys are looking at starting one, definitely do it. It's definitely very rewarding, definitely worthwhile, and you bring a lot of good to the world.
Yeah, I definitely agree with everything JT is saying. Listen, if you guys are starting a business, a nonprofit, whatever you guys are getting ready to start or do, listen, just take the time, the 30 minutes, an hour, sit down with a professional and figure out what you need to do to make sure you're A-okay. Because last thing you want to do is, a lot of times you don't want to go to one of the sites that, charge you a lot cheaper than what a professional would charge you. And then 4 years later, you find out something was done wrong for the past 4 years. And now it just blew up your entire nonprofit or for-profit business that you spent these past 4 years building. Just do it right from this beginning. $150, $300, $600, sit down with an attorney, lawyer, financial professional can go a long way when you're just getting started, to make sure you just kind of jump through all the hoops, dot all your I's, and you don't worry about potentially losing that nonprofit status or something like that.
No, 100%. I agree with you. I always tell people, sit down with somebody, don't go through LegalZoom, don't use Rocket Lawyer, because while it is, you can do it with that, you can also very easily leave something out because it's not automatic. So I always compare it to like playing a guitar. I can get the best guitar in the world. I don't know how to play it. I look cool doing it, but I don't know how to use it. So it doesn't help me. Same thing. LegalZoom is very good if you know what you're doing. If you don't know what you're doing, it's really not worth much.
Yeah. You get what you pay for with a lot of things.
Yep, exactly.
Yeah.
Well, thank you both for coming and talking today. This was very enlightening. I think anyone who's looking at a nonprofit got a lot of great information out of this seminar. So feel free to reach out to any of us. You saw the contact information on the previous slides. Go rewind the video if you want to contact JT and or Josh or myself. And thank you for coming and attending. Thanks, JT. Thanks, Josh.
Absolutely. Thank you, Chris.
Take care. We'll see you guys.